Hello fellow traders, and welcome to another bullstock.info video. Today an educational look at the bullish engulfing chart pattern. The bullish engulfing chart pattern. Not only will we look at several bullish engulfing chart patterns, try to point that out so you can visually see what the bullish engulfing chart pattern looks like. But we're also going to show you how to combine that bullish engulfing chart pattern with stochastics, moving averages, some other factors, and to make your trading probability that much higher for a successful, profitable trade using the bullish engulfing candlestick pattern. So without any further ado, let's take a look at some of the chart patterns and figure out this chart signal we call the bullish engulfing. Okay, the first example that we will have of a bullish engulfing, as we are looking at this chart here, the bullish engulfing is a large body candle that engulfs a previous day's candle. You'll notice the green outline candle is bigger than, and the body is bigger than, and actually engulfs or swallows the previous day's red or bearish day's candle. Actually, this is a very powerful bullish engulfing because the longer the engulfing candle is and the more previous day's candles it engulfs, the more powerful that signal is, and the higher the probability that bullish engulfing is going to lead us to higher profits. Remember, trading is all about increasing your odds, increasing the probabilities that you are correct. So as we see here, this bullish engulfing engulfs the previous day's candle, and another interesting thing to note, or a good factor in our odds, is that this is forming right on the 200-day moving average. That's your red line. That's an area of support. That moving averages often act as a resistance and support. So we have the support of the 200-day moving average, the engulfing that is engulfing two previous day signals, and if we look down here, you'll notice that the stochastics, which we like to follow, are just coming out of the oversold area, and stochastics are curling up. So we've got several factors in our favor to ensure the probability or of a good trade. So let's take a look at what happens on the next trading day. We get a positive move up on this ticker symbol. The next day, another positive move. And now we've gone several days down the road after this bullish engulfing, and look at the price move we have had here. So look at the engulfing again, forming on the 200-day moving average, engulfing a couple of previous candles. You could have bought this probably 715, 720, maybe on the high end. And look where we have gotten with now a doji all the way up, closing at $9.07. So over a $2 move on this bullish engulfing signal that encompassed several factors. The hammer type signal that it engulfed, formed on support of the 200-day moving average, stochastics in the oversold curling up, and led us to this move. All right, another bullish engulfing that we want to take a look at is this is a smaller engulfing signal, but it engulfs a doji pattern. Now, you've also had several consolidation sideways days of trading, so you've got the engulfing. Now, if you look at our normal stochastics, they have not curled up yet, but we also have a fast stochastics indicator that we also take a look at. That one is up. The 1233 stochastics, that's our normal stochastic setting, is nearing the oversold area but hasn't quite curled up yet. So if we wanted to based off of our fast stochastics indicators, we could take a purchase. So we see what happens on the next day. We get a gap up, and you'll notice now our stochastics have started to curl up. So we will take a look at how this signal does after the next several days. All right, so look at the price movement that we've had now. Following this small engulfing a doji with stochastics in the right place. What is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of positive movement, bullish candlesticks before we get our first bearish candlestick. And you'll notice, look what stochastics are doing now. They are in the overbought area. Now, we've had 3 or 4 days of positive movement with stochastics in the overbought area. So at that point, you would want to make sure your stops are tight and you're ensuring your profit. And then just keep an eye out, because now you know after a 3, 5, 7, 10-day run, more than likely you're going to have a pullback, some profit taking, something's going to happen. So again, all this move triggered off that bullish engulfing with support of the stochastics and a positive bullish engulfing.